Today, I'm going to cover how buyers can build a portfolio of low-cost investment properties over time and do it in a tax-efficient manner that gives them and their family long-term security. I'll discuss the types of investors for whom such a solution is appropriate and how the most important element is for them to first make a long-term plan of what they want to achieve for themselves and for their families. Then I'll cover all the practical steps to get this done. What's more, I explain how they can do it 100% passively without any of the liabilities and costs of being a landlord. So they can continue to focus on their business or work to generate more income. And also do it in a low risk way without using mortgages or building debt. Hi everyone, I'm Dr. T and I've been in the property business for almost 50 years. Here's a bit about me. In the 1980s, whilst working as a junior doctor, my hobby was computers and I co-founded one of the UK's largest PC manufacturers with over 3,000 staff. Computer making moved to China, and during the past 17 years, I researched and analysed the UK property market and developed a property business for 100% passive investors, which currently looks after almost 3,000 properties and is now run by my children and over 100 staff. I really enjoy helping people with property investment and making videos like this. Please hit the like button, drop a comment below, subscribe, and hit the bell. Let's get back to the video. So, who wants to build a property portfolio? Over the past 17 years, I've had thousands of meetings with investors, and hundreds of these have been with those who want to build a property portfolio. Typically, these investors are professionals or small business owners who've been very successful and amazingly busy. They come from all walks of life: private doctors, dentists, accountants, lawyers, IT consultants, small business owners in almost every industry. They have good income and good business profits and are high rate taxpayers. Many have been thinking about long-term investment for family security and retirement for many years, but have been so busy that they've not got around to it until they turn about 50 years old. Many have thought about property, but have been worried that they will not have the time to take on board the responsibilities and liabilities of being the landlord and dealing with letting agents and property maintenance. When they learn that they can be 100% passive investors and buy low-cost properties in a stepwise manner every 1 to 2 years, they get excited and start exploring. At this stage, I go through the 6 steps listed below so that they can understand what needs to be done in order to achieve their aims. I'm going to cover each of these 6 steps in detail. The first step is for them to make a plan of what they want to achieve. Typically, they don't need rental income right now. They usually have savings already built up with which they can get started and buy one low-cost property. They want to save and acquire an extra property every 1 to 2 years and thus build a property portfolio in the following 10 to 15 years in a tax efficient way. This will give them good income for retirement and then pass on to their children after they've gone. That is a typical long-term plan. The second step is to decide on ownership. As they are high rate taxpayers and want to own many properties, for the typical plan, it is best to set up a family investment company. The company will buy and own the properties, and they use a property accountant to set up such a company properly. This is just a limited company where the shareholders are family members, typically husband and wife, and also the children. The main difference from a normal company is that the shares are of different classes for parents and children. Parents' shares have the voting and dividend rights, and children's shares have the growth rights and may also have dividend rights. This means parents retain 100% control of the company, but the capital growth in the value of the shares over the long term all belongs to the children. Thus, by the time the parents pass away, on average in, say, 30 to 40 years, most of the value of the company is in the children's shares, and hence no inheritance tax is payable. In order to provide further security of the children's shares, these can be held in trust until the children are older or until parents pass away. I produced a separate video on how to set up such a property investment company. If you haven't subscribed yet, now's a good time. We publish content every week on UK property investing. Hit the bell and like. It really helps the channel and ensures you're notified when the next video is released. The third step is to buy investment property. The investor typically loan the money to their company, for example, £80,000 director's loan, and then the company buys one low-cost house. The buying process is outlined in a separate video I produced entitled 10 Steps in the Buying Process. This 100% passive investment process is different to buying in the open market and is much quicker, as both the properties and the buying process are contractually guaranteed. Once the property is selected by the investors, there is a solicitor's Zoom meeting to verify the ID, and legal completion occurs after this. The company becomes the registered owner and gets a regular rental income into the company bank account. The fourth step is to save more money to get the next property. The rental income stays within the company and is not taken out as dividends. The company does have to pay 19% corporation tax on net rent, and the investors continue to focus on their work or business to save more and give the company more loan from their savings. It may take 1 to 2 years for them to save enough to acquire the next property. Eventually, after a number of years, the company may own 5 to 10 properties with growing value and increasing rents. Purchase of further properties is thus made easier from the higher rental income. The fifth step is when the investors retire. Depending on their requirements and needs, they may start taking income out of the company as pension type income. Initially, they may consider taking back their loan, as this is tax-free and also reduces their inheritance tax liability. Later, once the loan is used up, they may take income as dividend and pay appropriate tax on this, but by that time, they may be lower rate taxpayers. Property values and rents continue to increase in line with the market and their income grows. The final step is passing to the next generation in a tax-efficient manner. Now, properties can double in value every 12 years or so. So after 30 years, when parents are over 80, all of this growth has been in the shares of the children, who effectively own most of the company. Thus, when parents pass away, there is no or very little inheritance tax payable. Please watch the message from our sponsor at the end, which explains the two important aspects of building the property portfolio in this way. Firstly, the whole process is 100% passive, enabling the investors to continue to focus on their work or business to generate more income for more properties. They don't need to get distracted by tenancy issues and property maintenance and legal liabilities. And secondly, properties are low cost, so the investors can easily afford to buy an additional property every 1 to 2 years without borrowing and being in debt. As investors want to be debt-free when they retire, overall, this works out better than using mortgages, especially if interest rates are high. Thanks for watching.
If you want to invest in property and get 7% net rent, long-term capital growth, no costs or liabilities ever, do nothing yourself, and be living anywhere in the world, then consider Find UK Property. They provide 100% passive investment solutions for long-term income from freehold properties starting at under 80k. You get a property that is affordable, fully renovated, already rented out, contractually guaranteed and productive from day one. You become the owner and rent it back to Find UK Property, so that they become your tenants and look after all aspects of the property in a fully compliant way. You never need to deal with tenants, estate agents, or do any property maintenance or repairs, or pay for any costs. Find UK Property look after over 2,500 houses, all of which are sublet to their own tenants. And on average, they get more rent from their tenants than they have to pay the property owners. So that way they can cover all the property costs. Their solutions are great for those wanting to retire on pension type income or gradually build large property portfolios passively in a tax efficient manner. Please visit the website at findukproperty.com and speak to a consultant today.